Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach the art of trading at Trading University. First market we'll take a look at will be the Australian US dollar. Aussie US dollar, you had a big bounce on that critical level we were talking about the last 2 weeks. We've been saying all along that we think you have value. Well, you had value not just there, but we think on down towards the winter lows here, which is a historic low also. Not sure if this uptick here, that counter trend move up, has legs or not, but nonetheless, you have a pretty nice intermediate term uptrend here, so you definitely have to respect that. Dollar Swiss, you had a big turnaround there in sympathy with that really dismal U.S. non-farm payroll report. Bad economic data seen as far as jobs, and that's a bit of a surprise. Generally, you'd be looking for something between 150,000 and 200,000 jobs added. It was, I don't know, something like 32,000 or 34,000 jobs added. So, somewhat disappointing. On the other hand, we think it'll just be an opportunity here, buying the dip. If you look at the current formation this year, you see an intermediate term downtrend marked by lower highs and lower lows, right? Lower high, lower low. Well, you shifted that here in May. You actually put in a higher high relative to that. So what happens following a higher high? Then we look for the next higher low. The higher low essentially is going to signal the trend reversal here that we're looking for. So if we're going to get that trend reversal, we're likely, very likely, I'd say, to get that higher low in this area, just above 96 even. So we'll be watching that buy zone here. You see that green box? That's going to be our buy zone. And if, in fact, you're going to see a reversal of this guy, which we think you will, pan out to a monthly chart. There it is, and that's why we're so bulled up on that guy. We think there's just a ton of room on the upside. And we think it's been a long time coming also as far as weakness in the Swiss franc. This is a dollar Swiss chart, so that would be the dollar outperforming the Swiss when you get a breakout on the upside and that guy starts to move a lot higher. So like that trade long term. We think this could prove to be an excellent level to get in there if you're not already, or to add to existing longs. Next market, the dollar index. There's the dollar index. You couldn't quite get to resistance, and you're having a correction here. Similar story. I really don't need to add anything to it. If you're going to get a turnaround of this intermediate term pattern, that big bearish pattern there, if you're going to get a reversal of that, we're gonna count that not the higher high we saw here relative to those highs, but it's gonna come with a higher low and then the higher high. So higher lows got to hold first. So we would anticipate support in the dollar index a little bit lower from here. Again, we think long term that's going to be a great level to initiate long positions, or in this case, in my case, add to existing long positions. I've been long the dollar. Boy, you have to go out to a long-term chart. You have to go out all the way to a weekly chart. I've been long the dollar since 2013, so a long time to be in there, and I'm looking forward to adding to those positions back to a daily chart. Can't really do it technically until I can clear that resistance right there, 96.30 or so. But from a shorter term perspective, I think you'll get trading opportunities here a little bit lower there. Definitely market to watch. Next market, the euro US dollar. They see that big rally up again in sympathy with that poor US jobs data. You know, the truth is that you get a bad jobs data. If you have trouble in the U.S. economy, it's not just bad for the U.S., it's bad for everybody. Essentially, you have a slowdown in the U.S. economy, it's probably going to play worse in Europe. So we see this that big spike up is a counter trend move. Over the shorter term period, we think you do have a nice downtrend in place, and it's normal that you'd have a correction, a reaction to that. So big level here to look to set up shorts right there, 114 and change. Let me pan out to a weekly chart. In a perfect world, we'll get a double top somewhere in the area of those purple lines in here. Give us a double top against 116 even, or then again 117 and change, and by all means, I think that'd be almost the ideal position to set up longer term shorts in the euro. We see the past 2 years is essentially consolidation. We see the last 8 months or so as a bear flag, and we think when you chip through there, there's a lot more downside here in the euro. So it's something to watch. Next market, gold. Here's gold on the daily chart. You can see you've got long-term resistance at 1300. That held. We think it's pretty significant that you made a lower low in this market at the end of May. And again, we talked about looking for that first higher low in the Swiss franc, in the dollar index. Here's gold, where we would see this as the first lower low, and then of course followed by you get a lower low, then you look for the lower high. So we would look for a lower high here to complete a head and shoulders, and we think that'd be a nice formation. Set up long-term shorts here. Let me pan out to a weekly chart, and you get scale on this guy. Here's gold, and I could see that. I could see a nice rally from here. Put on a nice right shoulder there, rounded right shoulder to complete that head and shoulder, and then we would look for a move down, lower lows, essentially eclipse 1,000, and then move on down into the 900, 800 handle for gold. Last market we take a look at will be interest rates. We'll see what the Fed thinks about that. Is that bad employment number an outlier, or is that a new trend? Have to see. Here's interest rates. So that's a weekly chart, and we think you already have a very long-term top in the 10-year note, which would be a bottom in interest rates, and we think you're seeing a test of it over here. Let's look at the daily chart, and there's that RTT level again. Man, they're all over the place, aren't they? And you see that perfect retracement to it. Here it foiled that rally, and we'll see if it does it again. But it looks again like a counter trend rip higher. And in our estimation, in our methodology, more specifically, we would see that probably is another opportunity to take short trades against that. So that'll definitely be something to watch. My name's Jay Norris. I teach at Trading University. Thank you so much, and we'll see you next week.